Hello everybody, my name is Lev and welcome to Level Up Finance, and today I wanted to talk to you about ETFs. Lev, what the heck is an ETF? Good question. An ETF stands for Exchange Traded Fund, and according to Investopedia, an ETF is a type of security that tracks an index, sector, commodity, or other asset, but which can be purchased or sold on a stock exchange the same as a regular stock. But it can also be a combination of bonds, currencies, industries, and commodities. All right, so let me give you an example. Let's say you want to buy Lev's ETF. Now, Lev's ETF is a combination of 5 different stocks. Let's just say Company A, Company B, Company C, Company D, and Company E. Now, let's say I buy 10 stocks of Lev's ETF, and each stock is $100 each, so I'm spending $1,000 for 10 stocks. Okay, so I invested $1,000 into Lev's ETF, and after a year, let's see the performance. Company A is up 20%, very good. Company B is down 10%, okay, not so good. Company C is up 90%, Company D is down 60%, and Company E, well, it didn't really change, 0%. Now, just for this example, let's just pretend each company in this ETF is worth exactly the same price. So after a year, my overall profit is 40%. So that means at the end of the year, I'll have $1,400, which means I have a $400 profit. Okay, so this is what I love about ETFs. Because you're so diversified in different stocks, you manage your risk a lot better. Now, can you imagine if I put all my money, $1,000, into Company D, instead of going with the ETF, I would be down 60% and I would only have $400. Now, Lev, what if you put all that money into Company C? You would have a $900 profit. Yeah, that's a very good point. I could have put all my money into Company C, but you know what? Because I want to manage risk, and yes, I could have made a lot more money, but I don't want to take that risk. So it's better that I get an ETF and I make a profit than a loss. Now, I'm not saying ETFs are always profitable, but with ETFs, because you are diversified, you can manage risk a lot better. So that's why I would go with ETF. Now, if you did go with an individual stock, yes, you can make a lot more money. Now, nobody could predict what can happen in the stock market. We could take good estimated guesses, we can make predictions, but there's always room for error. We don't know what will happen in 10 years. We don't know what will happen next year, in a month, a week, a day, an hour, a minute. We don't know what will happen with the stock market. So that's why ETFs are a great way to diversify and to manage risk. But Lev, that means I could have made 90%, but I only made 40%? Yes, that's right, but at least you didn't lose 60% of your money if you had invested in Company D. Okay, so now that we know a little bit about ETFs, let's talk about the different types of ETFs. There are many different types of ETFs, but today I'm going to only be talking about 4. Now, the first one, currency ETFs. Now, this can be one currency or many different currencies, and you can trade dollars, euros, pesos, any currency. Okay, the second ETF, it is bond ETFs. Now, there are different kinds of bond ETFs like treasury bonds, corporate bonds, and savings bonds. The third ETF, commodity ETFs like copper, gold, silver, or even soybean. Okay, the fourth ETF, and my personal favorite, industry ETFs. Now, this tracks indexes like the S&P 500. A ticker would be SPY, or another industry ETF such as ARK. Okay, so SPY is one of my favorite ETFs because just with this one ETF stock, you own 500 stocks in one ETF. So that means you're really diversified. And let's say there's a company that goes haywire. The company is just doing terrible. It doesn't matter because you have 499 more companies. And let's just say 40% of the companies are doing bad. But you know what? You still have a lot of good companies. So you're very diversified. The SPY ETF began in 1993. And since then, it has had an average of 10% growth till this day. Now, that doesn't mean every day it's been growing at 10%. That means maybe one year it was up 15%, for example. Then the next year it was down 10%. Then the next year it was up 25%. But on average, since 1993, the ETF has been going up 10%. And with this ETF, you really have security and you have a lot of diversification. Now, I'm not giving you any advice and I'm not trying to tell you you should buy this ETF, but I'm just telling you what I like. So what's great about ETFs like the SPY is not only has it experienced an average of 10% growth every year since 1993, but you also receive dividends. So you're winning 2 times. The stock is growing and you are getting money just for having the stock, which you can reinvest back into the stock and then you can earn more money. That's actually what I do. I do dividend reinvestment. And every time I receive a dividend, I reinvest that money back into that stock and then the stock grows even further. Now, even if the stock drops, I still receive a dividend. So one of the things that attracted a lot of people to ETFs back then was that they can own a little bit of a stock and they didn't need to buy an actual share. Let me give you an example. Let's say I want to buy a share of Amazon. Amazon is worth roughly about $3,000 a share. Now, can you imagine paying for a full share of Amazon, $3,000? So imagine there's an ETF which costs only $200 and you can own a fraction of that share. That's why ETFs became so popular, is because you can own a fraction of that company. You can own a percentage of that company in an ETF. You do not need to buy the whole share. All right, everybody, thank you so much for watching my channel. Please like, comment, and subscribe. This would really help me and I would appreciate the support. I also want to hear from you all. What are your favorite ETFs? I'd like to hear it in the comments below. Please write your favorite ETFs and why you like them.